In this video, I will cover the international bookkeeping entries for depreciation. I only focus on straight line method. I'm Carsten Berkau, full accounting professor in Osnabrück. My basics clips will help you to understand international bookkeeping. The case study DODD Limited comes from the textbook, chapter number 17. The company buys a saw which is at 120,000 euros, which is the net amount, and the acquisition took place on the 3rd of February in 2004. The saw will be paid by bank transfer and the useful life of the saw is 5 years. We are going to cover the first two accounting period 2004 and 2005. The acquisition takes place on the 3rd of February in 2004. No value-added tax is to be considered in this case. The useful life is 5 years, and the depreciation in 2004 is only calculated for 11 months, which gives us 22,000 euros. The depreciation in 2005 equals 120,000 over 5 years, and it gives us 24,000. The first bookkeeping entry, which is the acquisition, so it gives us a debit entry in the property, plant and equipment account to the extent of 120,000 euros. Credit entry is recorded in cash bank. Then we have to record depreciation, so it's a debit entry in the depreciation account. And we record a credit entry in the accumulated depreciation account. In the next accounting period, we make a bookkeeping entry alpha. So with regard to depreciation, I like to cover a few problems that might occur. One of them is the net or the gross value. So depreciation is always based on the net value, which we refer to as the cost of acquisition. Second problem might be that there is an acquisition which takes place in the middle of the year. As we depreciate the assets accurate to the months, we have to consider how many months is the non-current asset in the possession of the company. So for example, in the case of DODD Limited, which bought the saw on the 3rd of February, the February will count for depreciation, but the January obviously does not. Next problem which we have to tackle is actually the fact that there might be a salvage value, or as the international accounting standards will call them, as residual value. So let's assume that DODD Limited, for example, will sell the saw after 5 years at 20,000 euros. In that case, the depreciable amount is only the amount which the asset lost in value. So it is 120,000 less the residual value, and it gives us 100,000, and this is the value which we have to divide by 5 years. So annual depreciation then will be 20,000. I start with the acquisition. My bookkeeping entry number 1 is debit entry PPE, credit entry cash bank. Next, I record depreciation. The bookkeeping entry is debit entry depreciation in 2004, credit entry in accumulated depreciation. In the next step, I close off all the accounts, as we will do at the end of 2004. That will give us a net loss to the extent of 22,000, which will be transferred to the retained earnings account. We are going to skip that step here. In the next accounting period, we have to consider depreciation to the extent of 24,000. So we use an account by the name of Depreciation 2005. Now we make the bookkeeping entry alpha to the extent of 24,000, and we record the credit entry in the accumulated depreciation account. Next we balance off the accumulated depreciation account. Again, depreciation is closed off to the profit and loss account, which is here for the accounting period 2005. So the value of 24,000 will be considered as a net loss, as we did not recognize any revenue so far. In terms of the non-current asset, we have to disclose it in the register of non-current assets. We record the register of the non-current asset as of the 31st of December in 2005. The cost of acquisition are 120,000, and we have to deduct the value as we can find it in the accumulated depreciation account. As we have to deduct it, we have to use a minus sign. So I take it just from the account. And it gives me the carrying value to the extent of 74,000, and that's the value we have to disclose on the balance sheet. So on DODD Limited's balance sheet, we disclose 74,000 as property, plant and equipment, which is after the depreciation. Now that you have seen the video, take the textbook and study the case.